Welcome back to another trading day in the markets. We have been off to a slow start so far with everything. But it looks like we're getting some things to settle down a little bit, which is nice. So let's take a look at everything that's going on. Each and every day when you're investing, it's important to have a system in place. So essentially, you just want to be doing the same orders of operations, similar to like going to the gym. You get to the gym, you do some stretching, you warm up, you get into the workout, you cool down. Investing is no different. When you have a system in place that's repeatable, it allows you to be more consistent and not to let anything slip through the cracks. So reviewing everything, everything's looking still real good. Google's gone a little back up. Microsoft's gone down. Home Depot's slightly down. Adobe has sold off a little bit more than Google and Microsoft. That's the reason I don't have it as a larger position, scaled back that position, and took some gains last year. Same with Salesforce. It's going to be a little bit more volatile than the mega cap companies. Looks like Ingalls Market's gone on a nice run, so more of a defensive company. So that tells me that people are shifting to be a little bit more defensive after last year, taking advantage of the companies that didn't perform as well as others in 2023. Occidental Petroleum's under 60 again. Interesting about Occidental Petroleum. Let me see if this will share on the screen. Give me 1 second, please. Here we go. So something I always like to look at is, and not a lot of people talk about, is book value per share. So like what is on their books? It's at 33.4. It's currently trading at a little under 60. So it's about double what their book value is. And I did a lot of research on this. I purchased this originally during COVID when oil became cheaper than dirt. As you can see, this company has not performed well over the last several years because of COVID. However, if you look at the growth rate, that is definitely something to take note of, as well as you want to be buying companies when they're distressed. Warren Buffett famously bought Geico when their share price went down a lot. He bought American Express during the uh, salad oil scandal. You could always search for that. And that's why it's important to have cash, is when some of these good companies, like last year, like going back to Google, was trading at less than $90 a share. I kind of look at that as like, hey, they hopped back in the DeLorean and they went back to, 2 years in time. If a company goes back 2 years in time and gives up all of that growth, that's definitely something to take note of, especially if a company is as profitable as this one. Back here, I'd expect DR Horton to pull back a good bit. I mean, it has just gone up. I mean, we bought it at 113, and I was expecting it to only go up to probably like 120, 125, but it's gone to 149. Again, it's a smaller position. Same with Tesla. I mean, it's not like a huge position. It's an important position. Ultimately, it's still well below where it was back in October of 2021, where it was over 400. So, I mean, it still has to recover nearly 100% to get back to that level. Um, but then, it was at like $100 at the beginning of 2023. So that just tells me there was a misprice in the market. It's probably more fairly traded, and reviewing what they got going on with their charging systems and things like that. Essentially, I look at them as like the future of gas stations almost, where they can get revenue from not just selling cars, but when you buy the cars, you use the chargers and then they make money from the chargers, the upgrades, the subscriptions. That's where they really have the potential to do quite well. Arch has gone up a lot this year already. Started the year around 165. It's up about $10. I think it's quite expensive now. But I mean, we bought it less than 120. So I mean, that's a pretty good price. Then we got a tip, that's just for stability. NVR hit 7,000, drop back down. Peter Thiel and Palantir, down about $5 from where it was. Very volatile company. You know, they went to almost $5 in 2022. They were at $35 in 2021. Same thing with Snow, very volatile as well. And then rounding out here, looking at CRISPR, we're slightly in the money there. Average price is 59. So like taking a look here, let's add some Fibonacci retracements. I don't want to go straight to the high. So for this, it's like, it looks like it's trading in a pretty good range here. So I'm going to look here on these candles. And essentially this is telling me it is trading below the 50% line. If it gets under 57, that's a buying opportunity. Gets under 50, buying opportunity. If it gets to 38.58, that's a 50%, nearly 50% decrease. So I mean, right here, I mean, here's like a big resistance at 117. That's the cool part about these lines is you don't have to like review the charts. It just does the work for you. So I look at these as like resistance lines, like 63, 69, 75. Gives me like benchmarks and gives me insight to what I feel like the company's doing. Same thing with PayPal. It's trading in this range here. I did more of a broader view here, but I mean, I'm looking at it as like, here's the lines, 62, 75. Hopefully PayPal can get profitable again. Let's take a look at what's going on inside of PayPal. Like maybe look at their book numbers. Their revenue per share is positive. Earnings per share is down. Most of the numbers are positive. I know they have some debt things going on. Their PE excluding extraordinary items is, 17, which for a fintech company is good. Cash flow is good. It's just gonna take some time on this. And I know they just partnered with Amazon, so that's definitely gonna help. Other than that, everything's looking pretty solid. I mean, we have some smaller positions, like, I had someone who had some cash, and we bought some Bank of America at 27.65. So I mean, looking at that, don't really like the company. However, they do make a lot of money. So sometimes you have to put your feelings aside and do what's best for the investment. So I mean, we bought it a small position, a couple $1,000s at 27.65. So I mean, that's down here. I mean, it went down, and obviously, as you can see, it was above 47. But I mean, overall, I mean, since 27, I mean, here it is at 2020. It's at 2020 levels. But I mean, it really hasn't done much since 2018. It's been very volatile. It does pay a dividend. So I mean, you can reinvest that, take the cash, whatever you want to do. So thanks to everyone for listening. Follow me on my journey, and I hope I can help you on yours as well. Bye, everyone.